Hey guys, thank you for joining me for the October 2022 real estate update. I'm going to be talking primarily about the national scene, and we will talk more from a local perspective, what I see going on in our local market, which would be kind of like Alpharetta, Cumming, Swanee, and Milton. I'm going to be doing those in individual videos. They'll probably be 1 or 2 minutes. They're just gonna be really local market updates. I'll probably be doing that weekly. But at first, we're gonna start and talk a little bit about the macro, what I see going on across America, and then we will actually break it out more into the local going forward. So this is just October. It's the middle of October. This is basically through the end of September, and a little bit about what I'm seeing going on. What is really driving our market right now is we're seeing interest rates have a huge impact on the market. As interest rates go up, shouldn't surprise you, less people can afford that house they've been looking at for a little while, and it is having an impact on supply and demand. Here is Mark Fleming, who is with First American, very well respected in the real estate world. And he says that when the economic uncertainty dust settles, those buyers and sellers who are on the sidelines will jump back into the housing game. Demographic trends support elevated purchase demand in the years to come. So it's a question of when, not if, for the housing market. So what are those demographic trends? Basically, right now, we are underhoused by somewhere maybe between 4 and 5 million houses. It's estimated it'll probably take between 8-9 years for the builders to actually build enough to the point where we have an adequate supply of homes. So I expect the undersupply of homes to continue to be a factor for the next 5+ years. When you go look on the media, what are you seeing though today? Now you're seeing things like falling stock market prices. The Fed speaks, the market listens, talking about crashes, things like that. So what I can tell you is that when there are uncertain times, look for individuals that you trust and ask them what they're seeing. What I'm doing right now is I'm giving you a real estate perspective at a very granular level. I work with buyers, I work with sellers. As I go back and as I look at the past year, let's just see what's gone on in our market. So if you look from June to June, the prior 12 months with June to June, you can see for the top 20 cities in America, you can see Atlanta's appreciation was right around 24.8%. That is huge. Obviously, that is not a sustainable number. And so what you've got to expect is you've got to expect the real estate market to slow down. And you can just see the numbers as we go throughout America. Las Vegas, 25%, Tampa, 35%, Phoenix, 26%, Miami, 33%. So what is the Fed doing to actually slow down the appreciation? They're actually working with interest rates. And what I can tell you is the headlines that people are seeing today, kind of shocking. You know, we started the year right around 3%. Right now, people are seeing mortgage rates around 7%. So if you've been looking and you started looking at 3%, now you're trying to buy something at 7%, it's a little bit of sticker shock is what's going on. If you just look, according to Freddie Mac, that 30-year fixed rate from January to today, you can see it started out around 3.2, and you can just see it's been climbing all the way up. The last 6, again, this is through the end of September. Boom, 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 6 right in a row. That one ended at about 6.7%. As of today, I actually saw rates today just at a 6 7/8. So right around 7, we have jumped above 7 in a couple of markets, and that does have a big impact on the ability to afford a home. The uncertainty and volatility in financial markets is heavily impacting mortgage rates, and that slide just shows that. 6.7, again, basically doubled in the last year. And what's causing this? Well, the aim of the Fed is to curtail demand in an effort to tame inflation. And when it comes to the housing market, the Fed's actions are really working very, very well. Again, when you look at the other videos that I'm going to be preparing for you, take a look. You can see that the number of homes that are selling is coming down. The average sales price, though, continues to increase. And that's what we're seeing at the local market. Here is First American. Again, home sales, both new and existing homes are falling. Builders have cut back production in response to the declining affordability. And annual house growth has slowed from a peak in March, about 21% to about 16.7% in July. Mark Fleming, very well-respected economist, says that while mortgage rates are expected to continue to drift higher over the coming months, much of the rapid increase in rates is likely behind us. I hope he's right. Nationally, while month-over-month house prices will decline, and what that means is that from July to August, the average sales price will probably go down. September to October will probably go down, but that's also seasonality in there. But it's the it's the annual house price declines are not expected. If you compare June to June, August to August, that's expected to continue to rise. And that is what we're seeing in our area. Given the ongoing supply and demand imbalance and continued strength in the labor market. So what is truly driving the market in the real estate world? Well, it's nothing more than what you learn in day one of your economics class. It's all supply and demand. So what's going on with supply of homes and the demand of homes? Well, if you look just at the number of showings through showing time, you can see the showings are down roughly 12%. That's basically the demand. That's the number of buyers out looking for homes. You can see that the supply of homes, the number of active listings, is up almost 27%. So what we are seeing there is we're seeing the impact of rising rates. It's having the desired effect. Sellers want to sell their home. They like these new prices, so there's inventory coming on the market, but we still have a very short supply of homes for sale. So if you're thinking of selling, I will tell you it's a great time to sell. Listed a home yesterday, $825, finished basement incoming, in a beautiful, beautiful home. Finished basement, been on the market about 24 hours. We have 2 offers on it, both above list price. Homes that are priced right and ready to sell, they are selling. But now let's get back to what the experts are saying to expect for the next year or two. Ivy Zelman, very well respected in the real estate world, is predicting that prices will fall 4% in 2023 and then another 5% in 2024. I believe Ivy Zelman also projected this year would also decline. That's also how you end up making the news. Is if you say prices are going up 4%, you don't make the news, but if you say there's a decline, everybody jumps all over that. Here is George Ratatouille from Realtor.com. He said, not surprisingly, deals are not getting done. With sales of new and existing homes declining for over half a year, given demand is cooling due to high borrowing costs, incomes falling behind inflation, and the still limited supply pipeline, it is becoming increasingly clear that prices have to decline to restore market liquidity and balance. Very well-respected economist right there. Here's Mark Fleming again. While the market's considered overvalued, may need to adjust to the not so new reality of higher mortgage rates, housing market fundamentals still support a moderation of annualized house price appreciation rather than a sharp decline. What he's saying there is the rate of appreciation is going to slow, not necessarily experience a sharp decline. And then here's John Paulson, who is a hedge fund manager. He actually called the crash in 2008. And he says, we're not at risk of a collapse today in the financial system like we were before. It's true housing may be a little frothy. So housing prices may come down or they may plateau, but not to the extent it happened. And what I am seeing right now and what I'm actually hoping is that we just go sideways for a little while. So here's a summary of what many of the experts are predicting for next year. Fannie Mae, 4.5% increase, 4.4. Freddie Mac, 4%. All the way over here to Ivy Zelman with a decline of 4%. I read something this week where Wells Fargo is predicting a 5.5% decline. What that tells me is that the professionals really don't know, but expect somewhere between plus or minus 5%. As we go forward, Zillow, I don't really like Zillow from the standpoint of predicting the value of one home, but I do think that they are very, very good at looking at MSAs, metropolitan areas. So for example, Atlanta would be an MSA, Savannah would be an MSA. So as you look at the MSAs, what Zillow is predicting is that in 2023, 618 MSAs will have appreciation, while 257 MSAs will have depreciation. They'll actually have a decline in the median sales price for homes. And 30 of these MSAs, they expect to go down greater than 3%. So where is Atlanta in this? Atlanta is predicted by Zillow, but right in here in the 3 to 5% appreciation zone. I think that's very, very healthy. I think I would not be surprised if we're a little bit higher than that based on just a limited supply of inventory I'm seeing. And then in 2024, 2025, and 2026, you can see analysts predict 86, 91, and almost 97% of all the MSAs to have appreciation during those years. Looks like even within the rising interest rate environment, that home values should be protected. At least that's what the experts are saying. So what is it that is helping and driving this market? Well, what I can tell you is it is really nice to see the amount of equity that people have in their homes. And then that serves as just a huge buffer against inflation. I do not believe there's a better investment for people, for the average person in America, than owning a home against inflation. It's one of the few places where you can introduce leverage and help people's returns. So realize that real estate is a long-term appreciation gain. So if you go back and you look at from the first quarter of 1991 to the second quarter of 2022, look at the appreciation in the various states. You can see in Georgia, almost 283%. That's appreciation from sales price to sales price. When you consider that most people put down maybe 10% on their home, the return is just really, really big for 30 years. So you can see why individuals that own their own homes, it's estimated that they have about a 40 times net worth than somebody that actually rents their home. Other states I look at Utah a lot. Man, look at that return. That's just a lot of spillover from the West Coast. Texas, 333, Arizona, huge. But again, real estate as an investment, very, very solid. And what is it that drives it? Well, in life, you have to live somewhere. It's one of the basic needs everybody has. And when you compare the average cost of the increase in rents, that is just an astronomical increase in rents. And what I truly believe is that when you rent a home, you're making a mortgage payment. You're just making your landlord's mortgage payment as opposed to your own. So I believe very strongly in home ownership as an investment, but there's also so many other benefits to owning a home just outside of the financial benefits. There's the security and stability. I've gone into many homes of individuals that have been renting a year or 2 years or even 3 years, and they are still living out of boxes. The stability of owning a home and the security, not being worried about rent going up at the end of the year or having to move because the landlord decides they want to move back into their home or sell it. There's also certain privacy benefits to living in your own home. You're able to personalize it, make it your own, paint that wall, have pets, do home improvements, expand, make it your own. Lots of benefits. The health benefits of just owning, of making sure that with most mortgages, they actually force you to pay down a little bit of principal every single month. So it's a forced saving. So there's a financial benefit, but it also educates you on accumulating wealth. And then also just from a civic and a pride perspective, people that own homes are much more likely to get involved in school boards and local government, lots and lots of benefits. So today in the Atlanta market, I work primarily in the Alpharetta, Cumming, Milton, Suwanee, Sugar Hill, Johns Creek areas. If you live in any of those areas, I would love, and you're planning on selling or buying, but if you're planning on selling, I'd like to offer you a free home seller's guide. It's things to consider when selling your house. And if you'd like to just download a free copy, go to bestatlagent.home.com. That's kind of an abbreviation for Atlanta. Bestatlagent.com, and just download your own free copy. The section of this that most people like is you get a little checklist for selling your home. People like to be able to see, okay, let me get this checklist and let me get started. If you'd like to have an agent come by, take a look at your home, I'll tell you, should you paint this? Should you fix this? Should you finish the basement? I'll walk you through and give you from a buyer's perspective and from a return on investment perspective, what you should do to prepare your home for sale. My name is John Foster. I'm in Keller Williams. I have done this full time since 2003. And I would love to help you sell your home or buy your next one when you're actually ready to buy. So if you have any questions, feel free to call me, 770-722-7010. Thank you for listening.